Let's then talk about now Masters of Finance, the economy, where it is. Na economy. You know, that's everywhere now you go. Even if you're going to buy one orange and they tell you how much it is, you're trying to negotiate. Na economy. Siwezi kata. Siwezi enda chini ya hiyo. Tafadhali. Chukua tu. Siwezi enda. Na economy. But how do we live with this economy? We have invited somebody who understands these things and has been in this industry for a while. Robert Kibaara is the Group CEO of Housing Finance. Good morning, Robert.
Good morning.
How are you doing?
I'm good.
Karibu sana to the hot seat of the situation.
Asante.
Yeah?
Thank you for having me.
You are one of the very few Kenyans who are smiling in this economy. So let's hope that by the end of this, that smile will be infectious.
we will have been infected with a smile.
Because where? But City will welcome you with the day's proverb.
Yeah.
Every week City goes to an African country. He mines proverbs from that country. He brings a proverb a day. Now, your job as a guest is to listen to the proverb and give us your own interpretation. What does the proverb say to you? This week the proverbs are from the Republic of
Gambia.
The Gambia.
The Gambia.
Yes.
Yes, you would definitely understand the Gambia.
The Gambia.
It's not just Gambia.
No. There are some who even refer to it as the Islamic Republic of the Gambia.
Right inside Senegal.
Yes. Not too big a country, but a country nonetheless.
Yes.
Okay.
It has one neighbor.
Yeah, it has one neighbor, yes.
One neighbor and the sea.
Yeah.
Uh-huh.
If you stir up water in the pond, you will bring up the pond.
If you stir up water in the pond,
You will bring up the pond.
you bring up the pond.
Yes.
Okay. So what's the question?
That's the proverb. Now the question is,
Yes.
tell us what you think.
What do you think the Gambians are telling us with
Yes.
this proverb?
That if you stir up the pond, I think obviously the ponds usually, what is it called? Silt normally settles in the pond, at the bottom of the pond, and if you stir it up, then you bring out the reality of the pond, which is basically the silt that is settling at the bottom of it. And it says that, I think it means that some matters are just better off being left to rest or to just stay the way they are. Otherwise, if you stir them up, you're going to bring out the reality of things.
Yeah, the sleeping dogs lie.
Yes. Yeah, sort of, yes.
Wachana nayo.
Wachana nayo.
Wachana na imekuuliza. Wachana nayo.
Yeah.
We wachana na hiyo kitu.
You will bring up the pond.
Wachana nayo. Look at this one. Okay. Housing finance.
We actually called HF Group.
HF Group. Hi.
HF Group.
The journey. When this guy was taking his first mortgage.
Yes.
No. When his uncle was taking his first mortgage, he took from Housing Finance Corporation of Kenya.
Then,
Yes.
Right?
Yes.
Then took from Housing Finance. Some people have heard it as HF, HFCK. Now it's HF Group. Give us this journey. How old is this company?
So our company was started in 1965. It's been obviously long. Started as a mortgage company. Then, and of course, we were also building houses. So one side builds the houses, the other side
Sells the houses.
or mortgages the houses. And that time it used to be called the names that you have talked about. Over time we have evolved. Now we are called HF Group. We have 3 companies within HF Group. We have HFC, which is the bank. The bank basically is a full service bank, not just a mortgage company. We do mortgages, but we are a full service bank. We also have a property company, HFDI, which is basically the company that has built the most number of houses in Kenya, 18,000. But we do more than that now within that company, and we have an insurance business called HFBI. So those 3 companies, HFC, HFDI, HFBI, are what forms HF Group.
Okay.
Yeah.
So what does the bank now do?
The bank is
If I wanted a mortgage,
yes,
where do I go?
you can come to us. We have
HFC.
Yeah, you can come to HFC, which is the bank.
Okay.
But the bank also now does full service banking. So SME banking, personal banking, diaspora banking, institutional banking, commercial banking. We serve a whole spectrum of our customers' needs. So yeah, we are no longer we are a mortgage company that does full service banking.
Okay.
Yeah.
Okay.
That's what I can say.
And then the property development
The property
is
development
still
company
doing that.
does that. We do develop properties on behalf of our clients. Say, for instance, we work with the large homeowners. We have a solution called Landowner Wealth Management Solution, where we allow people with the land, we give them our expertise. So, for instance, we master plan, we design the properties, we do titling process, we design the houses that are going to be there. We even sell on behalf. And we've got probably right now about 3,000 different properties, both our own and those belonging to our clients, all legitimate. And the good thing about us as a company, for all the years in a world that has full of scamsters, for all these years since 1965, we don't have a single failed project. We have delivered a title deed to every customer who walked our doors.
How have you been able to do that?
Because we do really detailed due diligence of any property that we get into. We do what is called root searches, the origin of the land, from when it started.
The green paper was a road card.
Not even just green card. We just go back
Beyond.
to when the property started being registered, sometimes even before independence. And we follow through to ensure how did it change hands, detailed due diligence, so that when you're buying with us, of course, we have got to protect our name. When you're buying with us a property, then you know that property is very, very well. We've done enough due diligence to ensure that it's actually safe to buy. So that is how we have managed to obviously do these things. And we've got a lot of, if you're interested, you can go to our website. We've got a lot of properties listed there. Yeah?
Yeah, we see them all the time.
Yeah.
And then do you now have an insurance arm as well?
We have an insurance
HFBI.
business, not an insurance per se. We originate insurance. We do insurance within. We work with insurance companies to forward insurance to them. So, for instance, in all our transactions, insurance is involved. If you're buying a home, you need insurance. If you're buying a car through us, insurance is involved. So, all this insurance, obviously, we give preferential rates to our customers, and then we forward that to preferred insurance companies. Of course, very well vetted insurance companies, so that then you don't lose your money, or you don't have a problem if you need to claim.
Yeah.
It's been a journey.
Yeah. So it seems like the blue-eyed boy for, the group over time has been mortgages. How come that stood out over time, beyond everything else?
Yeah, we were formed as a mortgage company. We were started as a mortgage company. In fact, the reason why this company was founded was to enable indigenous Kenyans to own homes.
Yeah.
To own homes. So we've lived true to that. We still originate of all the banks, I think between us and one of the other large banks, we originate probably half of all the mortgages in Kenya today. And obviously, we are enabling now clients to own mortgages through affordable housing, through the Kenya Mortgage Finance Company, with interest rates of about 9.5%. So what has happened is that we've stayed true to that. We still do a lot of mortgages, and of course, we play in property. But to basically build a more sustainable business and to serve more of our customers' needs, then we do all these other full-service banking solutions that we have. And that's going very well.
When you talk about 18,000 and counting, that footprint is big.
Yes, it is.
Okay. Footprints need a name.
Yes.
Tell us some of the more remarkable achievements that you've had that people know. Because they're probably within sight and we see them. but we have no idea that it was...
It's amazing. It's an interesting story.
Yes.
We built Woodley Estate. We built Buruburu. We built 5,000 houses in Komarok. We have more recently built houses, for instance, if you go to near Precious Blood, you'll find an estate called Precious Gardens, Precious Heights. We have got near Committee Prison, we have another one called Richland. We have Clay City. We have, and very many other, we have built properties across Nairobi in multiple places. In terms of mortgages, we've done close to 60,000 over time.
Where?
Yeah.
Over those years, and for now, you as Robert, in the many years that you've been in banking, the financial services sector, if I were to ask you whether Kenyans are financially literate,
yes,
what would be your honest answer?
Yes and no. I think Kenyans are informed, really informed. There is a lot of knowledge that obviously people go through, but there is a lot less. Just the fact that people really get scammed a lot through very basic very basic things that you can just wonder, really, how did you get scammed in this one? There's the fact that people really get scammed a lot in either these pyramid schemes or things like that. You hear, like there was a recent one in Eldoret the other day. Just tells you that there is need for a lot more financial literacy. People just understanding how do things really work in the financial world. If somebody comes and tells you that I'm going to pay you interest of 20% a month, that's a scam. 100%
right
from
off.
day one.
You don't even have to
It doesn't matter. You don't have to check 10% or 15% a month. What business are they doing to benefit themselves and benefit you at the same
20%.
time? Yeah, it's a scam. It's as simple as that. Things don't work that way simply.
So what is it that leads us to go there? So like you said, people are informed. People are aware of very many things. I mean, people have gone to school. A huge percentage of our population is educated.
Yes.
Right? Beyond primary into secondary, some beyond secondary.
Yeah.
But then there's a difference between just having knowledge and having the right financial knowledge.
Yes.
What's that gap?
Yeah. The gap, I think it starts in schools because our schools do not teach people. I think if there is something that people need to be taught in schools is to deal with the one thing that we all deal with every day.
Money.
The fact that you came here today, you are going to spend some money for sure. And everybody who is listening to us today will spend some money today. But we are never taught about this money and how money actually works. And what is possible and really what's not possible. I think it starts with the schools, and we have got to change that to make people know, understand about money a lot. And then, of course, now then people depend on friends, relatives, to inform them about the next deal. So somebody comes to you and tells you, I've gotten this really good deal. They are paying us 10%, or there's this opportunity. And then because somebody you know and trust is referring you to something, then you tend to believe in it without checking. Without checking. I think most of us, the most trouble we've gotten into is as a result of
due diligence.
Influence from just somebody you trust and say, you don't check. Come on, someone.
That's enough due diligence.
That's enough.
I know this
You
person.
know them.
I have spent so much time learning and interacting with Robert.
Yes.
That I trust Robert.
I trust Robert.
So if Robert has done the due diligence, then by extension, I have.
Exactly. That's how we get into trouble.
Do you think the issue is in school, or does it start from home? Citi has mentioned this a number of times before.
Yeah.
How many homes actually have conversations about money in front of children, or where children are involved in conversations about money, just to start understanding money from that basic, where you can see domestic budgeting, and they can see the budgeting is about money, why we are buying this, why we can't buy this, why we should not buy this.
Those conversations are really held. I mean, like I remember my own father, the longest discussion we used to have about money is, I don't have money.
Oh, where's my change?
Yeah, where's my change? That's it. See the person even before you ask. So, yeah, but honestly, a lot of people also do not know a lot of things relating to how money works.
Yeah.
And money works like a river. Some people live next to a big river. Some people live next to a small river. But money will always come and money will always go. Your money, the money you earn, will always come to you and it will always go. What it leaves behind is what... So it doesn't matter whether you earn a lot of money or less money. It is basically how you utilize what you have. If you think about a river, there are people who live next to the Tana River and they are poor and they probably starve. And there are people who live next to a stream and they make the best use of that stream. Money is the same. Some people earn a lot of money but have absolutely nothing to show for it. There are people who earn a lot less and they have a lot to show for it. And that is the difference, is how savvy people are or how skilled you are in terms of managing money.
Do a lay of the land, because we take all of these things into consideration, people's behavior, dealing with money in an institution where certain things are happening, whether you're talking about investment in a home, whether you're talking about how you spend, save, you talk about diaspora banking, commercial banking, and all of these things. How do you see that things over time have changed, progressed, so much so that people's needs for financial empowerment have grown? What's the lay of the land from a perspective of a financial institution? How does it look?
Yeah, we see Kenyans now being a lot more knowledgeable, a lot more sophisticated, partly because of obviously the challenges that have happened. If you look at just the report that came out about a week or two ago, savings in banks have increased significantly over the last couple of years. Huge, until people are asking, is it possible? And it's because people are now a lot more, obviously the pressures that have been there forcing more people to save. But we are seeing people now doing a little bit more sophisticated things. Of course, people are getting involved in stocks trading. People are involved in government-related investments. We see people obviously investing even through banks. And then the other classes of investments such as property, investment in properties. So we've seen people evolving from just earning and almost spending everything, and as income levels grow, as we have seen people getting to know, to see, to do, to find the need for being a lot more savvy around investments. And it's a good thing because obviously times have been hard, and it's important in times like this for people to pay some attention in how they manage their finances. For instance, the times that we've been going through, it's important to be fairly liquid, to have some cash somewhere. You've seen, like, for instance, last year you'd go to the supermarket and you see prices going up. Almost after every visit, you find the price have gone up. And most people are probably just one illness away from being poor. So it's a lot of things have changed in the country. People are becoming a lot more savvy in terms of ability to manage their finances.
Right.
Yeah, through different institutions and different classes of investments.
Are they really becoming savvy, or are they just, there are more opportunities, and people are just jumping into those opportunities? If you ask the people who have put money into, say, Forex or into a money market fund, do they know how exactly a money market fund works? If you ask people who have put money into crypto, do they know how crypto works? If you ask the people who are basically just putting money somewhere where they've heard there's an investment here and it works, do they actually know how it works? And is it important to know how it works?
Yeah, I think it's important to know how it works. Many don't know how it works, but there is still a lot of people who know, but there is actually need for people to understand. And one of the things I advise people, if you're putting money in investments, in any investments, put money in something that A, you love, you like as a person. Number two, that you understand. That you actually understand. And the good thing is there's a lot of information online if you want to understand how cryptocurrency works. You know, let me give an example. One time somebody came and wanted to invest in some pyramid scheme. A lot of money. He advised me, he was telling me, you know, I've gotten this opportunity. So I told him, actually, my aunt, and they wanted to take the money from the bank to go and invest. I told them, okay, I would obviously want to keep your money in our bank. But if you really have to go and take money to a pyramid scheme, let me teach you how to build a pyramid scheme.
So that you take money from others.
So that then you're not the one who is being scammed. You see it on the other side. If you really want to get involved in a pyramid scheme, you better be the owner. Yeah. And I took him through how a pyramid scheme works. It's just simply a pyramid. You take money from Peter
and Paul
and use that money to pay the next bunch of people. They'll go and inform others that there is a new opportunity here. Then they'll bring their money. You use that money to pay the next bunch of people. Then at some point you'll wait out and more people will come, and then you will run out with that entire base. Run away with that entire base of money. And that's how pyramid scheme works. So I told this guy, let me teach you how to, so that if you have to be involved in pyramid scheme,
you're the one.
Be the owner.
So did this person know that they wanted to invest in a pyramid scheme?
They didn't know. So long and short, they didn't take the money. They understood it. And they said, okay, fine. Then,
in their mind, when they were coming to withdraw money to go and invest in this thing, what were they investing in?
They had just been told that there is a place that you can get 10% per month or 15% per month.
Every month.
And they had a lot of money. This is a guy who was doing, I think, 50 million, Bob.
And you wanted to go and put it there. So
yeah. Wow. So that you can, I mean,
so you could get
5 million a month.
5 million a month.
5 million a month, yeah.
Retire.
Yeah. After taking him through how to understand how the thing works, he said, okay, now I understand. So
that's the thing then, you know, Robert. Somebody who has accumulated and amassed enough money like that, millions, tens of millions of shillings, and does not understand, cannot see that this is unlikely to be true, what does that say about our levels of understanding of money? And I know I'm harping on this because it's a big thing. We are always in this situation.
You see, our level of understanding. But to be fair to people, to all of us, actually, money matters are quite complex. If you take, for instance, just what you had talked about earlier, money market fund, for the average person to understand how these money market funds are built and the risks that are there when you're investing in these things is fairly complex. So what I advise people to do, just understand an area that you understand. If you want to invest in stocks, there's a lot of investment opportunities in stocks. Actually, people have become billionaires in this market through investment in the stock market. If you just say that I'm going to understand the stock market properly, there is a lot of information about it, and there are many advisors about that area. If you would want to understand, say, government bonds, treasury bills and bonds and how they work, coupons and all those things, then you can just invest in just understanding that area, and it needs to be something you understand. For me, I'm the old-fashioned kind of person who invests largely in property. From the time I was a young worker in the banks many years ago. And that's what I love doing, and that's what I understand a lot more about.
You derive joy.
I derive joy in being
Beacon.
Yeah. I derive joy from that, and I understand it, and I cannot be scammed.
Because over time you've perfected your knowledge.
Yes, and I can understand what property is likely to appreciate, what is not likely to appreciate, what area is likely to grow. I spend time understanding where is the next infrastructure coming to. Is there a new road being built in this area? So that then I can buy a property before the road comes. So, you can't understand everything. It's quite, even for professionals like us, it's pretty complex. A lot of these things are pretty complex. When you go to crypto now, that's a totally different world. In fact, that is just as good as gambling.
That is voodoo.
That's gambling.
Muga, you had a question.
Yes, I wanted to take our guest a little back to something he said about the increase in savings that we are witnessing in the country. What are we witnessing? Is it that more money is being deposited, or is it that more people are now depositing money?
It's actually both. So more people are investing in or saving, putting in savings in banks.
Yes.
And so that has been growing over time, actually, just through this period that we've gone through. Right from COVID time, we've seen more people saving in increasing amounts over time. But also we've seen people saving for houses to buy. The affordable housing, by the way, has also spurred savings because there's a deposit that is required for affordable housing. So we, for instance, as we've seen in HFC, we've seen people investing in something called a housing development bond, which is where you save, you earn interest as you prepare to book a house in the affordable housing schemes that we have. And we've got also a product called Nyumba Yangu, where you can be able to save for your house. And it's an accredited affordable housing saving scheme. But generally, overall, across all banks, we have seen people saving more. People saving much more than before. Perhaps just thinking that because times have become a bit tougher, I need to have a little bit more. And also, I think it goes without saying that it's important to have, in situations like what we've had, especially with a bit of uncertainty around cost of things, although this year is a little bit better, we have seen people wanting to put away some more money aside. And that's good for the country. It's not good for the economy because the more people spend money, the more economy does get spurred. But it's good for households.
So are they saving more money in Kenyan denomination, or are they saving it in foreign denominations like the dollar?
There's a whole group of people who have stashed a lot of dollars in banks. But that's a small group of people. Most of the rest of us have put saving in shillings.
The reason why I ask is, if I look at Japan is my best example. When I look at how it is, the culture in Japan and the saving culture in that part of the world, it is serious.
It is.
It is absolutely serious. But it also enables the government to borrow, which means it enables the government to do things that ordinarily it could not do.
Yeah.
But it also helps them in that they are borrowing in their own denomination. So
yeah,
the vagaries that we have to deal with because we borrow in foreign denominations they do not have. Now, does that therefore mean that if we have more money now available, the government clearly enjoys borrowing, this government that we have, should then there not be a corresponding move in development vis-a-vis the borrowing that the government does? Because there is money to be borrowed.
Yeah.
And the government does borrow.
Yeah, that's true. So, yeah, it doesn't necessarily follow. Because a lot of the savings that we are seeing, obviously people putting in a lot of money in banks in Kenya, and of course in directly in government paper, that part of that goes to funding the national debt. We have now touched about 10.5 billion. We are now at 10.5 billion, no, 10.5 trillion shillings in overall national debt. So, and of course we've had very heavy repayments of the national debt over time. And that means then, see, if this money was coming back to investments in infrastructure, in things like, for instance, common user facilities for SMEs, or to fund agricultural activities, or to support basically the productive areas of the economy, then you can argue that that's now exactly the Japanese model. People save, government takes the money, plows it back to the real economy, and that then finances that now creates more opportunities for people to make more income and more money, and it is plowed back, and it's a nice, neat circle of wealth creation. The challenge we face is that a large part of that money actually goes to service the national debt, which then does not necessarily come back to people, to the real economy. That's really just where the issue is. But it's generally good for households to save. It's generally good for households to save, and it's good for people to develop a saving culture. Also, we are very used to investing in, for instance, plots and properties and all that. And it's just good to mix your investments, to mix what is liquid and what is illiquid. If you have an illness in the family and you need to sell a plot, you might not be able to do that within the days perhaps required to be able to raise the money. So there's need to balance between illiquid assets and what is liquid. So balancing between savings through whichever means that one does save, and also some of these other classes of investments that are a little bit less liquid is a good strategy as an investor.
What would you advise? What would the percentage look like? Liquid and illiquid investments?
For me, I see that it's good to have different classes. So there is a continuum, for instance. Cash is very, very liquid. You just go to the bank and withdraw your cash.
It's there.
Even if it's a fixed deposit, you can break the fixed deposit if you have to, and take care of what you need to take care of. And then you have got others that are a little bit less liquid, but you can still realize cash. For instance, there are people who invest in stocks. It might take some days for you to sell your stock, but you can still get the money. There is obviously things like the government paper, treasury bills and bonds. You can still sell. It might take a few days to do that, but you can be able to sell. Then you go all the way to property, landed property. Landed property takes very long to realize that. So I think having a sort of a 50-50
would be a good mix.
It would be a good mix. Or just looking at, we normally advise people have about 3 months of income. About 3 months of income
equivalent
in some form of liquid assets.
Okay.
Yeah.
When you talk about property, there is of course land, and then there is homes that can be made available for rent and rental income.
Yeah.
Is that a good way of thinking?
A home or a
home ownership?
Home ownership.
Yeah, as an investment.
Yeah. So first of all, a home is not just an investment. A home is a source of security. So I see like when we are handing over homes to new homeowners, you can just see the joy, not just for the entire family. You can just see the joy of people just walking into their own home. And also not obvious. I mean, if you're going to pay rent your entire life, I believe a home is the one largest investment that we normally make in this life. The one largest investment you can. If you think about a car, you'll probably buy several cars over your lifetime, if you or whatever else that you buy. But the home is the biggest investment that you make, and it's not just a source of. It saves you obviously paying rent, but also it is a source of security for the family. People like to feel that they own, and to be honest, if you own your home, even if things go really bad, if you lose your job or whatever happens, then you know that you have a place that is home.
You have a fallback position.
You can look for food and all these other things, but you can go home, and that's your home, and nobody can get you out of your home. So that's I think the biggest reason why people own homes. But some people also own homes to save themselves the cost of rent and all that, and that's a good thing. A coin saved is a coin earned. On the other hand, then obviously investments in real estate with regards to, for instance, rent or property, it's also a really good investment. The good thing about that is it lasts a very long time. I think the best income I've ever seen for me is rental income. Yeah, you just wait. There's an agent who manages the property. And at the end of the month, you just see SMSs from your account. people paying rent. And you've probably not been there for the last 3 months.
Yeah.
You've not visited the place for the last 3 months. And, money just coming in. So it's nice. It's passive. It lasts a long time. If a tenant doesn't give you joy, you can get another one and move on with your life. So it's actually a really good investment to own a rental property. Now, it's not easy, but what I got some advice, and which I can share with the listeners and the viewers today, sometime many years ago, from a very close relative. He told me, don't build rental properties that you would live, that you'd necessarily live in. There's always somebody who wants a roof over their head. And so
build for the market, not for you.
As a young investor, I started with Mabati houses somewhere near a flower farm, and I can tell you a 50 by 100 fits 36 units, double on the right side, sink on the left side, and a toilet and whatever at the end.
Wow.
At the end, and those things are actually quite profitable. They are actually profitable. Many years later, I demolished them and used the Mabatis to fence somewhere else, and sold that plot to buy something else. So my point is that it is a good investment. It is a good investment. Can be passive, and it can last your entire lifetime. Yeah, you can build a house today, and you can enjoy the income from that house until you are 80, 90. Yeah. So it is a really good income. And as HFC, we finance those things.
If you look at quite a high population, rather a high population of percentage of the population, is that a place where folks are struggling with finding an extra coin to do one or two things, and that's in the majority.
Yes, the majority is.
Yeah. So what would be the advice? I mean, we hear it all the time that, nothing is too small for you to put aside. Nothing is too small for you to invest. So from where you sit, what would it be that you're telling people? Because again, we go back to that phrase of, well, in this economy, you can't really do anything. Is that the case? Is that No?
First of all, there is always an opportunity. We always say, never waste a crisis. Yeah. In every crisis, even COVID had its own opportunities. And even now in this market, there is a lot of opportunities, and it's always good. When I think about these things, I think about three things. The first thing is that start where you are. Just start with where you are. My friends from the lake have this saying that says, "Chaka chaka."
Answer to.
Chaka chaka.
Chaka chaka.
Where answer. Wacha kuongea sana. Just start
somewhere. Yeah. Start where you are. start with what you have. Start what you have and do what you can do. Start where you are
with what you
have and do what you can do. And there is always, there's no little. People wait until they get rich one day to start investing. But actually, it is, I learned that lesson very many years ago. I was a teller in a bank many years ago. And somebody advised me, just start somewhere. Just start. And I remember those many years ago, I was working in an upcountry town. Those small, we were buying plots for 15,000, and it was a lot. Somewhere in the middle of nowhere. And it would take like 2-3 years to finish paying for 15,000 for that one plot. Those plots today, you can sell them for maybe 2 million, 3 million. That's quite a long time ago. My point is that just start where you are. And obviously, it's quite difficult. It's quite difficult for most folks. And while inflation has really come down, which helps, I think we are below now 4% as of this month, it doesn't mean that things are cheap. Because last year we saw very rapid increments in cost of living. Then there is the tax burden. All these taxes that are coming up, new ones, even the health-related one is a tax. So it's quite tough for people, but you can balance. The best way to do this is this. When you have some income, take aside part of it before you receive it. Have it sent to a circle before you receive it.
Commit it already.
Commit it and let it. Then somehow you'll find yourself fitting within what's left.
Right.
But as long as it is in your hands, like for instance, in our bank we have a product called Target Save, where you just set it on your mobile. Every month it just sends 1,000 or 2,000 or 3,000, whatever amount.
It deducts.
It deducts automatically and sends it to a kitty that you can save. And it has very high interest rates. Actually, one product called Fanaka has up to 16% interest.
Per annum.
Not per month. So it saves. Not per month. Yeah, you can save, but the best thing is to have it deducted upfront before you touch it. Yeah, that's what I can say.
No, that is actually very true. What you're saying is absolutely true. The literacy that Eric spoke of, I don't think it is a lack of literacy, but it is the literacy that people are attracted to.
Yeah.
Because people have this idea about what they think or believe is a good investment.
Yeah.
Land universally is accepted.
Yeah.
As a good investment, and that's why there are many scammers in the land business. Yes,
that's true.
Because it is understood people want to buy land and they value it, and it's good because when you have a growing population like ours, you don't see a time when land will not be valuable, and it is true in the foreseeable future you do not. But I look at some of the more developed countries where you will find that many people actually opt to rent instead of buying houses. One, the idea of buying a house, it's not that they don't want to buy, but when you balance the amount of money you would use in buying the house vis-a-vis other interests you may have or where you can invest your money, you'd rather invest that money and use the proceeds to buy a house rather than committing the money that you have to the house.
Yeah, that's true. Several things there that you have said. I think the first one is, first of all, people confuse. People do what they like doing. You see, what is worthwhile is not always easy. Yeah. If you think about the things that you've ever done in your life,
actually,
the biggest ones.
It is never, no, not always. It is never easy.
It's never easy. Yeah. The things you've ever done in your life that you are proud about were not easy. If they were easy, anybody could do it. And so that discipline of doing what is right and not what is easy is a good thing to start. But also, honestly, sometimes people confuse either speculation with investments.
Right.
There will be somebody who will genuinely say that I am gambling for investment. Investment.
Gambling for investment.
Yeah. You're gambling as an investment. Or somebody will say I'm buying a car and it's an investment. It's not. Anything that removes money from your pocket every month is not an investment.
And it's depreciating in value.
It's depreciating in value and removes money from your pocket literally every month is not an investment. An investment is ideally something that puts money into your pocket. And the more passive it is, the more passive it is, the better. the more it doesn't require you to do anything about it. It's basically your money working for you. And it can start with even small amounts, very, very, very small amounts and grow. So people like what they like to see. And of course, the discipline is not easy. But the more you practice, in fact, the more you save, the more you can save.
The more you save,
the more you save, the more you can save. When you start small, chaka, and then
you find yourself
because it reinforces that. It reinforces itself over time, and the more you can save, the more you can actually save. Some people also confuse investment for business. Mm-hmm. Business is very different from investment. If you go and buy whatever maftata and you want to sell it in a shop, that is business. You can make money or not. An investment is when you have made some money, you have squirreled it away somewhere where it produces a return. That is an investment. So a business and an investment are two different things. Business, you can make a profit or a loss. An investment adds money to your pocket.
You know, all these things you're saying, you can clearly see them. You know, you can, for you, they're clear.
Yeah, they are.
All those things you're saying, for many people, we hear them all the time. But then, because of the so much information, you're then lost in, okay, so which one makes sense, what doesn't? For example, if you just give the various investment options available, then someone is confused, so which one do I start with? Because this person came yesterday and told me this. The other person comes tomorrow and tells me this. Every new person makes their sound like it's a better one than the previous one, you know? So how do we, for example, as HF, do you have a branch, a way where we can come and ask questions and learn and know how to check? If I am thinking of saving, if I'm thinking of investing, if I'm thinking of, these are the basics
exactly
that I should do.
Yeah.
Do you have
we have
services?
Our branches and our people are quite well trained in terms of understanding how you can maximize the opportunities that are there in investments. But also we have got business advisors who can then advise you on business, on what you can be able to do on the business side. Just walk into any of our HFC branches and ask that. If you are looking for property, for instance, we will guide you around how to get property, which ones are safer, which would have a better return. We can then be able to advise you on all these things. And then also, there are every time there are opportunities that exist in such a time for a lower income earner, for a bigger business person, for somebody who is looking to enter in business. There are every environment, like even the one we are in, has emerging opportunities that are there. If you want to start a business, what really are the nicer, the more lucrative areas that you can be able to get into? But investment is different. Investment is the way you see a squirrel putting something in the ground that it can use one day in the future. That is really what investment is. Yeah.
Okay. Ask Sigei.
Now, I'm saying there are those who argue that in terms of difficulties like now is when huge profits can actually be made.
Yes.
The analogy is often given during times of war.
Yes.
Where there's absolutely chaos, total chaos. And yet the opportunities that then arise, you actually find that those who are able to harness it and position themselves adequately will actually make money.
Yeah.
But how does one squirrel away money when whatever you had is being demanded of you legally through taxes and through the rising costs of everything around you?
It's actually quite difficult, and that's a very fair question. There would be people who just thinking, if I can survive one more day,
yes,
if I can be able to pay for this school fees, I can be able to pay this. And it's not always practical that people will be able to. You can't save when you have a child at home who you have not been able to. And quite honestly, it's been quite difficult
like that
for many people. Thankfully, I always like being an optimist. Thankfully, there are a few things that are happening that do help. For instance, let's take the issue. I'll come back to what you have asked. I just want to paint a picture of that there is also some hope. Food prices. If you go up North Rift, there is actually going to be a bumper harvest this year. There is very huge inflows coming from diaspora that are helping, obviously, even the shilling now at levels of 129. So there is still some opportunities there, but it's hard for people to be able to save if they don't have the money. But what I advise people to do, and I've done that myself in the past, is whatever you are doing now, think about something else additional that you could do. Because sometimes ago when I was working in a small town, I would leave my job, and I had a small business that I was doing in the same town, and at some point actually that business started making more money than
the salary.
And what you ask yourself is, what is the biggest pain people are suffering? In that pain, there is an opportunity.
Opportunity in pain.
Well said.
In that pain.
Well said, Robert. Thank you very much for coming. People are saying they really enjoyed it. Come back.
Okay.
In fact, Peter Otieno is calling you, what is it? Robert Kibaara Otieno.
This is The Situation Room, the only way to start your day.